Friends, today we are going to start the topic that is called as AMT, Alternate Minimum Tax. The provisions of section 115 JC, JD, JE, JF. These provisions are dealing about the concept called as alternate minimum tax. Friends, very important chapter, A category chapter. I will cover each and every minute point in detail, assuming that you don't know anything about this topic. Ready? Start. What is the AMT? Before going into this, I would like to start with one illustration. Now this is the AGM, Annual General Meeting of Reliance Industry. I hope you know 80 lakh shareholders are there. Out of that, maximum shareholders attended this AGM. Here Mukesh Ambani, here some other directors, here Mukesh Ambani children, spouse and mother, like this all the people attended that AGM. So Mr. Mukesh Ambani is addressing the members, addressing the shareholders. Now he said like this: so I am very glad to inform that our company got the profits of 1 lakh crores. So I want to declare the dividend. So he announced it just like that. Mr. Mukesh Ambani announced that we got huge profits, so I am going to declare the profits as a dividend. He said like that. For your info, outside assessing officer is also there. So he is also wanted to know what is going on. So he is in the outside the premises in the mufti dress. So he wanted to listen what is going on. Mufti dress means he is in the security guard dress, because he wanted to know, he is spying what is happening there. He wanted to listen. So he heard the news, 1 lakh crore profit Reliance Industry earned for this year, so they want to declare the dividend. So he calculated in his mind only 1 lakh crore into 30% tax plus surcharge plus education cess, altogether 40,000 crore. So tomorrow I need to collect 40,000 crores from the Mukesh Ambani, that means Reliance Industry. He thought like that. Immediately Mr. Assessing Officer, he took the appointment and he went to office of Reliance Industry. He met Mr. Mukesh Ambani and he asked like this: Nana Mukesh, please pay 40,000 crore tax because your income is too high. Your income is 1 lakh crore. Like this he said. Immediately Mukesh Ambani replied, who told you that my income is 1 lakh crore? My income is only, all of you, 100 crore. On 100 crore, my tax liability 30% plus surcharge, altogether, for example, 40 crores. That's all. I will pay 40 crore tax. That's all. Immediately, assessing officer doubt. Yesterday only Mr. Mukesh Ambani said his income is 1 lakh crore. Then obviously on 1 lakh crore profits, the tax liability is 40,000. Assessing officer, he thought like that based on yesterday's information. But today Mukesh Ambani is telling, no, my income is not 1 lakh crore, my income is 100 crore. My tax liability is only 40 crore. Overnight what happened? Tell me. Then Mukesh Ambani replied, yes, 1 lakh crore is also correct. That 1 lakh crore as per Companies Act. As per Companies Act, my income is 1 lakh crore. But as per Income Tax Act, my income is, all of you, 100 crore only. Immediately, assessing officer frustrated. He got the shock also. Then he came to know that, oh, there are two acts. One is Companies Act, one is Income Tax Act. As for Companies Act, they are getting 1 lakh crore income. As for Income Tax Act, they got 100 crore income. But honestly speaking, SSC has to pay the tax only as per the income computed under the provisions of Income Tax Act, not Companies Act. That is correct. But here SSC's income is different income he has with respect to Companies Act as well as with respect to Income Tax Act. But assessing officer doubt how it is different, how it is too high as per Companies Act, how it is too low as per Income Tax Act. How? What is the reason? The reason very simple. There is a disparity between provisions of the Companies Act as well as Income Tax Act. For your information, in Companies Act, depreciation will be allowed, maybe WDV or maybe SLM. But whereas as for Income Tax Act, only WDV. That too, as per Companies Act, for your information, the rates are minimum. Whatever the rate specified, that is minimum. But in case of Income Tax Act, that is neither minimum nor maximum, that is fixed tax rates. and that too in Companies Act 100% deduction allowed, but in Income Tax Act once upon a time 150% deduction also allowed. For your info, in case of scientific research once upon a time 200% deduction also allowed. So that means always there is a difference between all of you Companies Act profit as well as Income Tax Act profit. Because of that reasons, so many companies declaring the higher income as per Companies Act, as well as declaring lower income as per Income Tax Act. The reason very simple. Why they are declaring higher income as per Companies Act? No, when there is a higher income, they can declare higher dividend. That is their intention. So for their dividend purpose, they are declaring higher income. Whereas for income tax purpose, I repeat, for the income tax purpose, they are declaring lower income. Because of our provisions only, I repeat, because of income tax provisions only, SSEs are not paying the tax. SSEs are escaping from the tax. SSEs are paying low tax or nil tax. Nil tax. That is the reason. Government of India felt that if it is the case, no one will pay the tax in the current year. Everyone will take these kind of benefits. That is the reason. So many years later, Government of India introduced one concept called as MAT, that is called as minimum alternative tax. I repeat, minimum alternative tax applicable for companies. I repeat, applicable for companies. But recently what happened? No, recently Government of India want to introduce another provisions called as AMT. I repeat, AMT, alternative minimum tax. This is for the purpose of non-corporate SSEs. So friends, for corporate SSE MAT provisions, whereas for non-corporate SSEs AMT matters are relevant. What is the meaning of AMT? How it will be? That points we are going to cover today. Now today's our agenda is alternate minimum tax. Very important topic. Once this chapter completed, then only we can go for MAT, minimum alternative tax. Maybe spelling may be different, but concept is same, but computation is completely different with respect to AMT and MAT is concerned. AMT applicable for non-corporate SSEs, MAT is applicable for corporate SSEs. These points we are going to cover right now. Okay, chalo. Now I wanted to explain in detail related to AMT. Please follow. What are the provisions of AMT and how it will be we are going to cover. I would like to take one example. XYZ, all of you, XYZ partnership firm is there. Their income is, let us say, 100 lakhs. Their income is 100 lakh. Net income, taxable income is 100 lakh. That too, this income out of profits, export profits. But no doubt, they can claim deduction under section 10AA. That is also 100%, that means 100 lakhs. So taxable income 0. Their tax liability also 0. I repeat, taxable income also 0, tax liability also 0. Whenever their total income as well as tax liability ultimately 0 for the purpose of Income Tax Act, this partnership form is come under nil tax. I repeat, nil tax, or else it is come under zero tax rates. That is the reason this company or this partnership firm no need to pay any kind of tax. Common sense. If it is the case, if it is the situation, who will pay the taxes to the government? Everyone wanted to claim benefit of section 10AA, or everyone want to claim the benefit of section 80 IA, IB, like this, then who will pay the taxes to government? No one will pay. That is the reason our government of India wanted to introduce one concept called as AMT. I repeat, AMT. The main motto of AMT is only one thing: to collect the tax. I repeat, to collect the tax from nil taxed entities. I repeat, nil tax entities. And same way, they want to collect the tax from low tax entities. So nil tax entities as well as low tax entities, they wanted to collect the tax. For that purpose, they introduced the concept called as AMT, alternate minimum taxes. Okay, chalo. So friends, these provisions are applicable for all SSEs except companies. Now Follow the first point. The provisions of AMT are applicable to all associates except companies. Friends, there are different assets, individuals, HUF, next one, another point, partnership firm, next one is LLP, next one is all of you called as AOP as well as BOI, next one AJP, last one for your info, companies. And local authority is there. For local authority this concept is not applicable, anyhow leave it. So out of these fellows, for all the members except companies, I repeat except companies, because for companies MAT provisions are applicable. For others, individuals, HUF, firm, LLP, AOP, BY, AJP, for these persons AMT provisions are applicable. AMT means alternate minimum taxes. These provisions only applicable. So see the word AMT is applicable to all SSEs except companies. All SSEs except companies. That's all. This is the point number 1. Now, what is the reason for introduction of MAT? Purpose of the MAT or purpose of the AMT? What is the purpose? Very simple. Whether it is MAT or AMT, different things. But here the point is very simple. In order to collect the tax from low tax entities or else nil tax entities, they want to simply collect the tax from low tax entities or else nil tax entities. For that purpose they introduce the AMT. So friends, for the purpose of AMT they introduce section 115 all of you JC, same way 115 JD, same way 115 JE, same way 115 JF. These sections have been introduced by the government of India. All of you see the sections. 115 JC, that is nothing but special provision for payment of tax by non-corporate entities, non-corporate associates other than companies. Number 2, section 115 JD, AMT credit or else tax credit for AMT. 115 JE, application of other provisions of this act. 115 JF, this is the definition. Okay, chalo. So these are the 4 sections relevant for the understanding the topic called as AMT, alternative minimum tax. Fine. Now I am entering into the syllabus. Please follow how to calculate AMT. I request you all, please follow. First of all, whenever we are doing the taxation of the firm or taxation of the LLP, taxation of HUF, taxation of AOP, taxation of BY, taxation of individuals, first you have to do step number 1, all of you, calculate total income. I repeat, calculate total income. Step number 1, compute total income. Total income. How to calculate total income? You know, income from the head, salary, house property, income from the head PGBP, income from the head capital gain, income from the head other sources, as well as income from that is clubbing. So clubbing of other incomes, whereas set off of losses you have to deduct. After that you will get gross total income. Out of the gross total income you have to give deductions, then you will get total income. So step number 1, calculate total income. Simply, nothing special. Simply how we will do for others, the same way we have to do for firm, HUF, LLP, individual, AOP, BY, like that. Okay, chalo. Whatever applicable that you have to do, we have to take it and we have to do. Anyhow, salary concept not applicable for others, applicable only for individuals. House property may applicable all. PGBP applicable for all, capital gain applicable for all, other sources applicable for all, clubbing provisions applicable for all, set off and carry forward of losses applicable for all, and deductions also applicable for all. That you have to do. Okay, chalo. After that, number 2. Next, all of you, number 2, we need to calculate tax liability. I repeat, we need to calculate tax liability. What is the tax liability? Normal tax liability or else regular tax liability we need to calculate. Normal or regular tax liability, that is step number 2. Tax liability, that may be normal tax liability or else that may be regular tax liability, we need to calculate. Next number, all of you, step number 4 as well as step number 3, These are about the computation of alternate minimum tax. First, we need to calculate adjusted total income. On that adjusted total income, we need to calculate AMT, alternate minimum tax. This is the way we need to do computation. All of you, I would like to tell you one word, year and after, whenever in examination or else whenever in your office, if anyone asks you, please calculate my tax liability, then you have to do 5 steps. Step number 1, total income. Step number 2, tax liability. Step number 3, adjusted total income. Step number 4, AMT, alternate minimum tax. Step number 5, you have to pay tax liability higher of normal tax liability or higher of AMT. I repeat, higher of normal tax liability or higher of AMT. You have to calculate. That's all. This is the way we need to do computation of tax liability. Okay, chalo. So see the steps. Step number 1, computation of tax liability of non-corporate SSC. Number 1, compute total income, that is normal total income, normal provisions. Step number 2, compute tax liability, that is normal tax liability. Step number 3, compute adjusted total income. Step number 4, compute AMT, alternate minimum tax. Step number 5, all of you, the tax liability is equal to higher of normal tax as well as higher of AMT. I repeat, higher of normal tax or AMT. So whichever is higher, we need to do computation. This computation is called as, all of you, computation of tax liability for non-corporate SSCs. Some people are paying nil amount of tax. That is the reason government asked you to calculate, lawmaker asked you to compute different tax liability, that is called as AMT, on adjusted total income. So step number 2, normal tax liability. Step number 4, AMT. Whichever is higher, we need to take. Tax liability is equal higher of normal tax or AMT. Higher of normal tax or AMT. I repeat, whichever is higher shall be considered. This is the concept called as computation of tax liability. There are total how many steps? 5 steps. I repeat, 5 steps. Step number 1, all of you, total income. Step number 2, that is nothing but, all of you, normal tax liability. Step number 3, that is adjusted total income. I repeat, adjusted total income. Step number 4, AMT, alternate minimum tax. Step number 5, higher of normal tax or AMT, whichever is higher. Higher of normal tax or AMT. Out of these two, whichever is higher shall be considered. This is the way we need to compute the tax. Total income on the total tax. Next point is adjusted total income on that AMT. Ultimately, whichever is higher, we need to take it. Okay, chalo. This is the way we need to do computation. Okay, friends, follow. Number 1, how to calculate tax liabilities. Ultimately, final answer is like this. Every non-corporate SSC has to pay higher of normal tax, which is computed on total income, or alternate minimum tax as computed on adjusted total income. So out of these two, whichever is higher shall be considered. That's all. This is the way we need to do compute the tax liability of non-corporate SSC. Simply, assessing officer wants to collect normal tax or AMT, whichever is higher. For that purpose, in case of all non-corporate SSCs, we need to do computation as for all the steps. Step number 1, step number 2, step number 3, step number 4, step number 5. 1, total income. 2, tax liability. 3, adjusted total income. 4, that is called as, all of you, what? AMT. Last, 5th, higher of the normal tax or AMT. That's all. This is the way we need to do computation. Here many students have the doubt, sir, what is the alternate minimum tax? How to calculate? For that purpose, first we need to calculate, all of you, adjusted total income. I repeat, adjusted total income. How to calculate? Number one, first to take total income of the SSC. I repeat, total income of the SSC. First you can take it. On that, we need to add certain things. What are the things I need to add it? Okay, chalo, please follow. First I need to add it. Deduction claimed under section. Deduction claimed under section 10AA. 10AA, we need to add it back. That's all. Number one, deduction claimed under section 10AA. 10AA. Student should get that out. Why we need to add this back? Very simple. Because of section 10AA deductions, so many SSCs are getting the deduction at the rate of 100% of export profits for first 5 years. And many entities are not paying the tax. Because of that reason, Government of India want to collect some alternate minimum tax. That to be calculated on adjusted total income. For computation of adjusted total income purpose, first we need to take total income. On the total income, we need to add back deduction under section 10AA if any SSC has claimed it. If any SSC has claimed the deduction under section 10AA earlier, that kind of deduction shall be added back. Deduction under section 10AA shall be added back. If any SSC has claimed deduction under section 10A, it should be added back simply, that's all. I know your doubt. Sir, then why you have given deduction and why you are asking me to add back? Yes, I have given that deduction, no doubt. Those people who are SEZ units and those who are manufacturing or developing the software and exporting, they can claim section 10A deduction, that we know. But because of that reason, if you have not paid the tax, that is not at all good. That is the reason I am asking you, please add back for computation of adjusted total income, add back. So conclusion, 10AA profits, SEZ profits are subject to AMT. SEZ profits are subject to alternate minimum tax. SEZ profits are taxable indirectly. That's all. Okay, chalo, next. Sir, if any SSC claimed deduction under section, all of you, 80 H2TT, add back. I repeat, 80 TT, that must be added back if you claimed anything like this. Deduction under section 80H to 80TT must be added back. So friends, there are different types of deductions. Some are expenditure based deductions, some are income based deductions, some are other. As far as income based deductions are concerned, we need to add back 80H2, 80TT, these sections, these kind of deductions we need to add it back. So SSC's deductions generally as follows: 80C to 80GGC, that is expenditure based, and 80IA to 80TTB, TTB, that is income based, and special nature 80 capital U. Out of that, if any SSC has claimed deduction under 80H2TT, TT only, 80H2TT, that must be added back for computation of adjusted total income. Here student will have the doubt, sir, why we need to add back these kind of deductions? Answer very simple. You have claimed deductions, income based deductions, you have claimed, no doubt. But because of that reason, you are not paying the tax. How far it is genuine? So please add back. Add back for computation of adjusted total income. You have to add back the deductions which are covered under section 80H2TT. That's all. Except 80P. I repeat, except 80P. Student doubt. Why? Sir, ATP is a cooperative society. For cooperative society, there is a one and only deduction that is called as AT capital P. That deduction don't disallow, don't add back. So that only you can allow. Any other deductions which are income based covered under section 80H2 TT, that should be added back. Next, last, deduction under section 35AD. Friends, already we covered all the topics. Intentionally I covered the topics first. Deduction under section 35AD, we need to add it back. Specified business, the deduction for specified business section 35AD must be added back. And whenever you added back deduction under section 35AD, immediately compulsory you have to deduct one more thing. First time I am talking about deduction here. You know what? Depreciation. Student doubt. What is depreciation? Yes, depreciation on the investment made under section 35AD. That figure we have to deduct. That's all. Here student may have doubt. Sir, what is the add back? What is the deduction? Simple logic I would like to tell you. With respect to section 35AD is concerned, whatever the deduction you have taken, that is not at all eligible. Indirectly you have to add back for computation of adjusted total income. Suppose I purchased building for 100 crores for R&D, that is for a specified business purpose under section 35AD. Yes, that is normally allowed as deduction in P&L account in case of computation of income as per normal provisions. P&L debit allowed, right? Yes, allowed 100 crores. But joke, no depreciation will be allowed with respect to section 35AD deductions. All these points I covered in the chapter called as PGBP. Covered na? Everyone? Yes. But today, for computation of, I repeat, for computation of adjusted total income purpose or AMT purpose, indirectly these 100 crores we are adding back. That means indirectly we are dissolving that 100 crores for computation of AMT purpose. Correct? Yes. Common sense. Whenever these 100 crores are not allowed, at least depreciation must be allowed, right? Depreciation should be allowed now. Once again I am telling you. Please feel personally, then you can understood this issue. 35AD deduction I asked you to add back. Then obviously the corresponding depreciation on the investment under section 35AD, corresponding depreciation, that would be allowed. So less depreciation under section 35AD investment, that is allowed. In this given case, 100 crore the building value must be added back, and depreciation on the building, that is 10%, means 10 crores must be deducted. That's all. After that you will get the amount adjusted total income. That's all friends, very simple. Adjusted total income, what is that? Adjusted total income is called total income plus deduction under section 10AA plus deduction under section 80H2TT except ATP plus deduction under section 35AD less depreciation with respect to investment under section 35AD. Then you will get adjusted total income. On that adjusted total income, we need to calculate, all of you, AMT at the rate of 18.5%. I repeat, 18.5%. Adjusted total income 18.5%. Student doubts are normal slab rates. No, not applicable here. AMT rate is separate, 18.5%. Some people may say, sir, 15%. Yes, MAT rate, minimum alternative tax rate for companies 15%, but here no, not 15%, 18.5% tax rate. After that, you have to calculate the normal tax liability, whatever you calculated on the total income, or else whatever the alternate minimum tax paid on adjusted total income, whichever is higher must be paid to the government. That is the ultimate motto of the provisions of section 115JC, 115JD, 115JE, 115JF. That's all. Okay friends, follow. Now computation of adjusted total income, how to calculate. So far I explained. Now total income as per normal provisions of Income Tax Act, you have to take it. That means for this purpose, first you have to solve the problem as per the normal provisions. On that, whatever the deductions you have claimed, that must be added back. Number one, deduction under section 10A. If anything is there, add back. Deduction under section 80H2TT except 80B, 80P, anything is there, add back except 80P. Next one, deduction under section 35AD, anything is there, add back. Next, depreciation allowance under section 32, assuming that deduction under section 35AD was not allowed on the assets on which deduction under section 35AD is claimed. Common sense. If 35AD deduction allowed, then obviously depreciation on that is not allowed. Correct? Yes. When 35AD is not allowed, obviously depreciation under section 32 will be allowed. That's all. After that, you will get the figure called as adjusted total income. Adjusted total income computation is as follows: total income plus deduction under 10AA plus deduction under section 80IA to 80TT except 80P plus deduction under section 35AD less depreciation under section 32 with respect to 35AD investment. Then you will get adjusted total income. This is the way we need to do computation. Okay, chalo friends. Now tax liability of non-corporate SSE, as I told you, total income, total tax. Adjusted total income, AMT. After that, tax liability is equal higher of normal tax or higher of AMT, whichever is higher. Simply out of these two, whichever is higher. That's all. This is the way of computation of AMT as well as normal tax liability as well as ultimate tax liability. So ultimately, any non-corporate SSE has to pay the tax higher of normal tax or AMT. So conclusion friends, every student has to solve the problem in 5 steps, or every practicing chartered accountant has to do the problem in 5 steps. Number 1, total income. Number 2, tax liability as per normal provisions. Number 3, adjusted total income. Number 4, alternate minimum tax. Number 5, what? That is tax liability is equal to alternate minimum tax or normal tax, whichever is higher. That we have to do it. Okay, chalo. With this, done with the topic. With this, completed the point. Okay, chalo. That's all. Now it is time for other information. Other information is as follows. Some people may ask like this, sir, AMT shall not be applicable to companies, okay, but all other than companies applicable or not? Answer, yes, applicable. AMT shall not be applicable if adjusted total income up to 20 lakh in case of individual HUF, AOP, BY, AJP. I repeat once again. Individual HUF, AOP, BY, AJP cases, you have to check their adjusted total income. If their adjusted total income is up to 20 lakh, that means not exceeding 20 lakh, in that case, AMT provisions are not applicable. So first you have to calculate adjusted total income. If it is less than 20 lakh or equivalent to 20 lakh, drop. No need to continue the problem for computation of AMT. Only this benefit is for individuals, HUF, AOP, BY, AJP. But in case of partnership and LLP, not like that. By default, AMT provisions are applicable without fail. Without fail, AMT provisions are applicable. Even though their adjusted total income less than 20 lakh or more than 20 lakh or equivalent to 20 lakh. That's all. This is the concept called as AMT, alternate minimum tax. Okay, chalo. So friends, the provisions of AMT applicable only if SSE has claimed deduction under section 10AA or 35AD or 80IA to 80RRB. If he has claimed any one of these deduction, then only AMT provisions are applicable, because we need to add it back, then only different answer will come. On that we need to calculate AMT. Okay, chalo. So friends, SSE must claim any one of the deductions, then only while solving the problem we need to add it back. Okay, fine. Next, climax. What is that? Sir, in exam hall or in the practical career, if any non-corporate SSC other than companies, non-corporate SSC compulsory do the problem like this. Step number 1, total income. Step number 2, tax on total income. Step number 3, adjusted total income. Step number 4, AMT. Step number 5, tax liability is equal higher of, I repeat, higher of normal tax or AMT. That's all. This is the way we need to do the problem. Correct? Chalo. That's all. Now how to calculate adjusted total income also I answered. Take total income plus section 10A if any, plus 35 AD if any, minus 32 depreciation if any with respect to 35 AD, plus 80 IA to 80 TT, any deduction if you claimed that also must be deducted, then you will get adjusted total income. Okay, this is the way of computation of tax liability as well as adjusted total income as well as AMT of non-corporate SSC. Okay, chalo. So friends, so far whatever we have covered, just we wanted to take the running notes. Once it is completed, the balance topics we will cover and we will solve the problems on this very small chapter but very important chapter. Okay, chalo. I request you all follow, start the running notes, continue the running notes. First point, put the banner heading AMT, alternate minimum tax. Alternate minimum tax. Alternate minimum tax. There you can write the index. First write the index. Section 115 JC, JD, JE, JF. In that you can write the index. Note it down. 115 JC, JD, JE, JF. Write one after one. First one, 115 JC. Special provision for special provision for payment of tax by non-corporate SSC. Special provision for payment of tax by non-corporate SSC. Non-corporate SSC. Chalo. Special provision for payment of tax by non-corporate SSC. Next point. 115 JD. 115 JD. AMT credit. Just write AMT credit. AMT credit. AMT credit. Next. 115 JE. Application of other provisions. Application of other provisions of this act. Application of other provisions of this act. This act. Next point. Next point. 115 JF. 115 JF. JF definitions. 115 JF definitions. Definitions. Okay, chalo. Continue. Start the running notes. All of you follow. First point, all of you. AMT is applicable to all SSCs. AMT is applicable to all SSCs. All SSCs. All SSCs. Except companies. Except companies. Companies. Other than companies. Next point. Next point. Purpose of this introduction of AMT. Purpose of introduction of AMT. Purpose of introduction of AMT. AMT. There you can write. In order to collect tax from. In order to collect tax from. low tax entities slash nil tax entities. Low tax entities slash nil tax entities. Nil tax entities. Low tax entities slash nil tax entities. Under that, you can keep the heading. Follow computation of tax liability. Copy. Computation of tax liability. Do it. Under that, note it down. Computation of tax liability of non-corporate SSE. Non-corporate SSE. Under that, number 1, compute total income. Compute total income. As for normal provisions, okay, as for normal provisions of the act. Next, compute tax liability. Compute tax liability. As for normal provisions of the act. As for normal provisions of the act. Next point. Compute adjusted total income. Compute adjusted total income. Adjusted total income. Outer column some intos. Some intos. Number next. Compute AMT, alternate minimum tax. Compute AMT, alternate minimum tax, is equal to adjusted total income into 18.5%. Adjusted total income into 18.5%. 18.5%. 18.5%. Okay. Next point. Step number 5. Tax liability is equal to. Tax liability is equal to higher of the following. Higher of the following. Hyphen normal tax liability slash normal tax liability slash AMT. AMT. Normal tax liability slash AMT. That's all. Next point. Put the heading. Computation of adjusted total income. Computation of adjusted total income. There you can write particulars, last column, amount rupees. Particulars, amount rupees. Total income as per normal provisions of the act. Total income as per the normal provisions of the act. Some intos. Next, under that, add the following deductions if it is claimed. Following deductions. Add the following deductions if it is claimed. If it is claimed. Add following deductions if it is claimed. Next. Under that, small a, add deduction under section 10A. Deduction under section 10AA. 10AA. Next, add deduction under section 80 H2 TT except ATP. Add deduction under section 80 H2 TT except ATP. Except ATP. Next, deduction under section 35 AD specified business. Copy. Deduction under section 35 AD specified business. Next, less depreciation allowance as per section 32. Less depreciation allowance as per section 32. Assuming that deduction under section 35 AD was not allowed on the assets on which deduction under section 35 AD is claimed. Depreciation allowance as per section 32. Assuming that deduction under section 35 AD was not allowed. Deduction under section 35 AD was not allowed on the assets on which deduction under section 35 AD is claimed. Depreciation allowance as per section 32, assuming that deduction under section 35 AD was not allowed on the assets on which deduction under section 35 AD is claimed. Outer column sum intos in brackets. Under that, you will get the final answer: adjusted total income. Adjusted total income. Adjusted total income. That's all. Next, special points. Note it down. AMT shall not be applicable. AMT shall not be applicable if adjusted total income is up to 20 lakhs. Adjusted total income up to 20 lakhs in case of individuals HUF, AOP, BOI, AJP. In case of individual HUF, AOP, BOI, AJP. Okay, copy the next one. Copy. The provision of AMT apply only if SSC is claimed deduction under section 10AA slash 35 AD slash 80 IA to 80 RRB. 80 IA to 80 RRB except 80P. Except 80P. Okay, chalo, that's all. Friends, our next topic is AMT credit. Very important concept, please follow. Try to understand the concept because same to same provisions are applicable for MAT. Now, section 115 JD. AMT credit, our next topic. Please follow, carefully follow. Number 1. SSC Mr. R is total income, let us say 100 lakh. Step number 1. Step number 2 is tax liability, let us say 40 lakh. Example, right or wrong, immaterial, 40 lakh. Step number 3, Roman number 3, adjusted total income. Because he has certain deductions, then obviously that is, let us say 300 lakh. Step number 4, AMT, alternative minimum tax, 300 lakh into 18.5% plus altogether surcharge and health and education cess altogether, that is, let us say 35 lakhs. Right or wrong, immaterial. The figures, whether right or wrong, that is not my motto. Okay, chalo. Now tell me, what is the tax liability? Tax liability is equal to normal tax, that is 40 lakhs, or else all of you AMT, that is 35 lakhs, whichever is higher. Answer, friends, very simple, 35 lakhs. That's all. No, 40 lakhs. So that means SSC has to pay tax as per normal tax liability only. Okay, chalo. But one small change, please follow. Is AMT liability, let us say 50 lakhs, because AMT is equal to adjusted total income into 18.5%, let us say 50 lakh, then tax liability is equal to higher of the both, higher of 40 lakh or 50 lakh, answer would be 50 lakhs. Please feel personally. You mentally, physically, emotionally, psychologically, spiritually decided to pay 40 lakh because that is the tax as per your regular income. Correct? Huh? Yes. But all of a sudden lawmaker introduced one concept called as AMT and asked you to pay AMT on adjusted total income, that is 50 lakh. Indirectly they are asking you to pay 10 lakh extra. Yes or no? Yes. That is the reason lawmaker wanted to give one credit called as AMT credit. What is that? Hey Babu, you paid extra, no? The extra amount I will give it as a credit. How much? That is AMT minus normal tax. That is, all of you, 50 minus 40. That is 10. This is called as AMT credit. I repeat, this is called as AMT credit. That's all. Now, the 10 lakh is allowed as AMT credit. Now, what is the use? Yes, that AMT credit can be carried forward up to the period of 15 assessment years. I repeat, for 15 assessment years it can be carried forward. 15 assessment years. Student doubt, what is the use of that one? Very simple, try to understand. Number one, we are in the year 23-24. That year, all of you, step number 1, total income. Step number 2, tax liability. Step number 3, adjusted total income. Step number 4, AMT. Step number 5, tax liability higher. Here all of you, 140 lakhs, 300 lakhs, 50 lakhs. Whichever is higher means 50 lakhs. Bad news, because you have to pay AMT. Take it for granted, when you are liable to pay as per AMT provisions, AMT credit will be allowed. AMT credit is equal to AMT minus normal tax. Here AMT is equal to 50, normal tax is equal to 40, then the credit is 10 lakh. That's all, over. Please come to the next topic. Next year, 24-25. Listen. Your total income, something. Your total tax, 50 lakhs. Your adjusted total income, something. Your AMT, let us say 70 lakh. Oh shit, you have to pay higher of 50 or 70, that means 70. You have to pay as for AMT only. The 20 lakh will be allowed as credit, because whatever extra you paid, that will be allowed as credit. Very simple. For example, here AMT, let us say AMT is 45 lakhs. Then tell me, higher of 50 or 45 means answer is 50. That means you come under normal tax. Good news, SSE is liable to pay normal tax liability. The good news is, whenever your normal tax liability is higher, then whatever the AMT credit you have, that can be adjusted. Least of the following AMT credit. The AMT credit formula, least of the following. Small a, how much is the outstanding AMT credit? How much? Sir, that is 10 lakhs, sir. Or small b, difference between all of you, this year normal tax and AMT. This year normal tax, that is 50, whereas this year AMT, that is 45. The difference is 5. Whichever is lower is 5. So 50 minus 5, you have to pay 45. Wow, good news. Why? You have to pay 50. Really you have to pay 50, no? But no need to pay 50. You have to pay only 45, because the 5 lakh will be allowed as credit. The 5 lakh credit, outstanding credit, will be adjusted. So simply lawmaker intention, very simple. When you pay as per AMT, no doubt, that is extra payment. That extra payment will be allowed as credit. That extra payment credit will be carried forward by you, and it can be adjusted in the year in which your normal tax liability is higher. Whenever your normal tax liability is higher, enjoy whatever the credit you have, you can adjust about that normal tax liability. Least of the following: outstanding AMT credit, or difference between normal tax and AMT, whichever is lower, can be adjusted. So balance amount only you have to pay. In this example, instead of 50, we need to pay only 45 lakhs. Okay, chalo, that's all. So that means out of 10 lakh, already I utilized 5 lakh. Balance 5 lakh will be adjusted and carry forward for another 14 years. Maximum 15. 1 year already over. Another next 15 minus 1, 14 years can be carried forward. That's all. This is the concept called as AMT credit. Okay, chalo. Non-corporate assessee has to pay tax as per the higher of normal tax or AMT. Correct? Yes. If non-corporate assessee paid tax as per AMT, then AMT credit will be allowed. Correct? Yes. AMT credit is equal to AMT minus normal tax. Correct? Yes. That AMT credit can be carried forward and can be set off for a period of 15 years commencing from that year in which the AMT was paid. Okay, chalo. Next point. credit can be carried forward and set off in the year in which your normal tax liability or regular tax liability is more than AMT. Correct now? Yes. Normal tax liability is more than AMT, then only it can be adjusted. Next point, quantum of credit, how much can be adjusted? Least of the following. Government always will give the least only. Small a, outstanding credit or difference between regular tax liability or else AMT. I repeat, regular tax liability or AMT, these difference whichever is lower will be allowed. Okay, chalo. I will take one example, follow. Now we are in the year 22-23. This year what happened? My step number 2, normal tax liability is 70 lakhs. Step number 4, my AMT, let us say 80 lakh. Yeah, I paid as per AMT because 80 lakh is higher. So 80 lakh I paid. That means my real tax liability is 70 but I paid 80. AMT credit will be allowed. That is how much, 80 minus 70, that is nothing but 10. So I repeat, AMT credit will be allowed when you pay as per AMT. When the AMT is greater than normal tax, AMT credit will be allowed, but that can be carried forward. Next year 23-24. Here my tax liability, let us say 140 lakh, whereas my AMT liability, let us say 135 lakhs. So that means we have to pay whichever is higher. So that means normal tax, that is 140. Whenever normal tax liability 140, whatever the outstanding you have AMT credit, the credit can be adjusted against normal tax. So it can be adjusted when your normal tax liability is greater than AMT. So we can adjust how much, least of the following, how much, small a, outstanding amount, how much, 10 lakh, or else all of you, difference between normal tax minus AMT, difference between normal tax minus AMT 5 lakh, whichever is lower means 5. So that means no need to pay 140, you have to simply pay 135. That is the intention of lawmaker. I will tell you one practical question, please follow. Live example, only for academic purpose, really happened. After balance sheet signing in one company, they have given party, only for academic purpose, really happened. So in that company meet, so many other company CFOs also just came to that party. Other company CFOs means other subsidiaries, senior accountants like this. They are discussing in the normal way. So they are asking like this, sir, you are in normal scheme or AMT? Like this they are discussing. Normal scheme or MAT. Okay, for this example purpose I am modifying. Some people are telling, still I am in AMT. But some people are telling, wow, I am in MAT, I am in what you call normal tax. Proudly they are telling, we are in normal tax. Some article students unable to understand why he is telling very happily I am in normal tax, why he is telling very sadly I am in AMT. Simple logic. You are in AMT means your company or your entity, so-called entity is in AMT means you are liable to pay as for AMT. Unnecessarily you have to pay more amount. Whereas in the year next year, suppose in your normal tax is liability is higher means, you know what? Whatever the extra you paid, that can be adjusted, no? That can be taken back, no? How? The set-off will be allowed in the year in which normal tax liability is higher. So that is the reason some people will say proudly, thank God we are in the normal tax, so liquidity problem won't be there. Whatever the tax I paid earlier excess amount, that can be indirectly will be set off. Balance only I need to pay. Like this they will say proudly, happily they will say. Okay, chalo. So moral of the story, AMT provisions means you have to pay as per the AMT means little bit higher. Obviously, normal tax or AMT whichever is higher means AMT sometimes. But whatever extra you paid, don't worry, your government will be given as a credit. That's all. The credit can be carry forward for 15 years. Some people may ask the doubt, sir, any interest will be paid? No, yeah, too much interest will not be paid. Sir, AMT credit can be adjusted. Yes, in which year, sir? In the year in which your normal tax liability is higher, that year it can be adjusted. Okay, chalo. With this, done with the topic. With this, done with the adjustment of AMT credit. Now all of you special point follow. SSC can claim AMT credit even in the such subsequent previous year, even if AMT is not applicable in that previous year. So subsequent years, even though AMT provisions are not applicable, yes, they can claim AMT credit even in the such subsequent previous year, even if AMT is not applicable. Okay, chalo, that's all. Next point. Friends, now it is time for running notes. Please start the running notes, all of you, with respect to AMT credit is concerned. Please put the heading section 115 JD AMT credit. Note it down. Section 115 JD AMT credit. AMT credit. Note it down. Copy. Completed. So with this, we're done with the topic called as AMT credit. So here one more point you can write. No interest will be paid by the government on such AMT credit. Okay, chalo, note it down. No AMT credit will get the interest. Okay, chalo. No interest will be paid on such AMT credit, outstanding AMT credit. Next, all of you follow. Now, other information. SSC following the provisions of AMT. Then advance tax as well as interest on delay payment of advance tax. All the sections are applicable or not? Answer yes. All the provisions of Income Tax Act are applicable with respect to those SSCs even though they are covered under AMT. See the word other provisions of Income Tax Act such as advance tax and interest under section 234B and C all are applicable. For example, if your tax liability is 10,000 or more, then you have to pay advance tax. Correct? Chalo. But my normal tax liability only 8,000, whereas my AMT, let us say 12,000. So friends, I need to pay whichever is higher. Whichever is higher means AMT in this example, that is 12,000. No doubt my 12,000 AMT liability is more than 10,000. Obviously advance tax is applicable and interest also applicable. That's all. This is the point. But here I would like to clarify one word. This AMT will step into shoes of normal tax. That's all. Whatever the provisions are applicable in case of normal tax, the same provisions are applicable with respect to AMT also. Okay, see the word. All other provisions of income tax such as advance tax and interest under section 234 BC all are applicable. ABC all are applicable. Okay, chalo, copy. Continue the writing. All other provisions of Income Tax Act, all other provisions of Income Tax Act shall apply to the SSC, shall apply to the SSC, even though he is liable to pay tax as per AMT provisions. As for AMT provisions. In brackets, advance tax, advance tax, interest under section 234A/B/C, etc. are applicable. A, B, C are applicable. That's all. This is the next point. Now, friends, now we can see the other points as follows. Number one, first point, listen. What is the AMT rate? Friends, AMT rate is 18.5%. But those units located in IFSC, International Financial Service Centers, then the rate would be 9%. Simply 9%, not 18.5%. Only simply half of the rate is only applicable with respect to those units located in IFSC. The AMT rate is not at all 18.5%, that is simply 9%. That is another point. And I would like to tell you another point. Compulsory every SSC has to obtain CA certificate report from chartered accountant in form number 29B for the purpose of MAT, but whereas 29C for the purpose of AMT. So SSC will obtain the report from chartered accountant for computation of, that is adjusted total income as well as AMT in form number 29C. Whether they are doing correct or not, I don't know. Assessing officer cannot verify. That is the reason every SSC to whom the provisions of AMT applicable, compulsory they have to report, they have to obtain the report from a practicing chartered accountant. That too, the concern form is form number 29C. Okay, chalo. Next one ma, where unit of SSC located in IFSC and derives its income solely in convertible foreign exchange, then the AMT is applicable 9% instead of 18.5%. Okay, IFSC 9%. This is the topic with relation to IFSC is concerned. Okay, chalo, copy, start, note it down. All of you, note it down. Under that, number 1, SSC will obtain report from SSC will obtain report from SSC will obtain report from computation of adjusted total income, computation of adjusted total income from a chartered accountant in form number 29C. In form number 29C. Next point. Next, where unit of SSC is located in IFSC. Where the unit of SSC is located in IFSC and derives its income in convertible foreign exchange. Then AMT is applicable. Then AMT is applicable at the rate of 9% instead of 18.5%. Instead of 18.5%. That's all. Next point. Friends, now follow the amendment as per the Finance Act 2020. Last year amendment, very simple, follow. Note it down. All of you, AMT provisions are not applicable. AMT provisions are not applicable if SSC opted the provisions of section 115 BAC etc. That means alternate tax regime. If anybody followed this one, then the provisions of section 115 BAC etc. these kind of provisions are followed by the SSC, then there is no question of AMT provisions. AMT provisions are not at all applicable. Okay, note it down. AMT provisions are not applicable if SSC opted the provisions of section 115 BAC. That is alternative tax regime. Next, follow. Very important point. Friends, the amendment AMT provisions are not applicable if SSC opted the provisions of section 115 BAC etc. alternative tax regime. Okay, chalo. Friends, now we can see the next part of AMT. Now important point, please follow. My regular income tax and my AMT. As far as regular income tax provisions are concerned, my tax liability, let us say 100 lakhs, whereas my AMT liability, let us say 150 lakh. No doubt, I need to pay the tax whichever is higher. So here I need to pay 100 or 150, whichever is higher means obviously 150. That means I need to pay the tax as for the provisions of AMT. Correct? Yes. One point I would like to cover, if anybody is payable, anybody paying the tax as for AMT, then automatically AMT credit will be allowed. How much is the AMT credit? AMT credit is nothing but, all of you, 150 lakhs minus 100 lakhs. 150 minus 100, that is nothing but 50 lakh. That's all. So once again, whenever you are a non-corporate assessee, we need to pay the tax as per the provisions of AMT or else normal tax liability, whichever is higher. In the given case, 100 lakh or 150 lakh, whichever is higher means 150 lakh. But the differential amount is as follows: 150 minus 100, that is 50 lakh. That is the AMT credit available. That is under section 115 JD. These are the points we covered. But the another point I would like to add here as follows. Friends, in certain cases, foreign tax credit, FTC, foreign tax credit will be allowed. What is that? That is like section 90 or else 90A or else 91. Friends, these points are related to double tax avoidance agreements. These are related to foreign tax credit. For example, as far as foreign tax credit is concerned, as far as regular income tax provisions, that is, let us say 50 lakhs. Whereas as for AMT, let us say that is 60 lakh. As for AMT provisions computation wise, my foreign tax credit, let us say 60 lakh. Now, as for the new provisions, now whenever you wanted to calculate AMT credit, the AMT credit shall be calculated only after adjusting foreign tax credit. That means 100 minus 50. That means, friends, 50 lakhs. Whereas 150 minus 60, that is nothing but 90 lakhs. Correct? Yes. Now my point is, AMT credit is nothing but, all of you, 90 minus 50, that is nothing but 40. So friends, as for the new provisions of Income Tax Act, AMT credit shall be calculated under section 115 JD as follows. Generally, AMT formula everybody know. AMT credit formula is equal to AMT tax liability minus normal tax liability. But the revised provisions are as follows. AMT credit under section 115 JD is equal to, all of you, AMT liability after adjusting credit under section 90 or 90A or 91 minus regular tax liability after adjusting the credit of foreign tax credit under section 90 or 90A or 91. So here 90 minus 50, that is nothing but 40. Okay, chalo. Now my another question. What is the reason for this kind of treatment? Very simple logic. Your tax liability we will calculate it as per the normal provisions of the act as per as Income Tax Act and AMT provisions of the act. Both the provisions we will do. And we need to pay whichever is higher only. That means 150 lakh only we need to pay. But friends, very simple point. Whatever the foreign tax credit you availed, that foreign tax credit after adjusting that, whatever the net figures, that shall be considered. Here, as for regular income tax provisions, my net revised figure is 50. As for AMT, that is 90. So now point is, AMT credit is called 90 minus 50, that is 40. Do you know the reason beyond this? Tell me the foreign tax credit difference how much as for this both the provisions. How much? 10. Yes. Whatever the foreign tax credit differential amount, to that extent, AMT credit shall not be allowed. I repeat, AMT credit to that extent of difference between foreign tax credit under section 90 or 90 and 91, the difference between these two shall not be allowed, ignored. So in this case, that is 60 minus 50, that is nothing but 10. So friends, to that extent of AMT credit not allowed, the balance amount 40 only can be carried forward. That is the provision. So I would like to tell you the single line answer as follows. AMT credit is equal to, all of you, AMT credit under section 115 JD. 115 JD is equal to, very simple answer friends, follow. AMT, I repeat, AMT after adjusting the credit. After adjusting credit. Which credit? Foreign tax credit. Minus what? Answer, regular income tax after adjusting credit. After adjusting credit. That's all friends. This is the formula. Okay, chalo. Now see the provision, all of you. First I will explain in simplest way. In other words, the amount of tax credit in respect of AMT shall not be allowed to be carried forward to the subsequent year to that extent of such credit relates to the difference between the amount of foreign tax credit allowed against AMT and foreign tax credit allowable against the regular income tax payable by the SSC. So short and length of the provision as follows. AMT credit to that extent not allowed. How much not allowed? So not allowed amount is not allowed foreign tax. How much is not allowed? Not allowed AMT credit is equal to, very simple, FTC foreign tax credit as for AMT minus foreign tax credit as for regular tax provisions. That's all. These two differential amount, to that extent it is not allowed. The balance amount only will be allowed. So I told you the formula also. AMT credit can be carried forward is equal to AMT after adjusting foreign tax credit minus regular tax after adjusting foreign tax credit. Once again I will take different example, you will understood better. Last illustration please follow. My regular tax liability friends, as simple as that, that is 200 lakhs, whereas my AIMT liability, let us say, that is 300 lakhs, whereas my foreign tax credit FTC, let us say year 100, let us say year 150 or else 120. Simple. Now my point is, really I am eligible to pay tax, I am required to pay tax as for AMT provisions. No doubt here AMT, if I pay, I will get AMT credit. AMT credit is equal to, all of you, simply 300 minus 200, that is nothing but 100. Sorry ma, 100 crores or 100 lakhs, that is not allowed. Reason, whatever the difference between foreign tax credit as for AMT and the foreign tax credit as for regular tax liability, not allowed. So 120 minus 100, that is not at all allowed. Actually allowed figure is 80 lakhs. That's all. Why 80 lakh, you know? So foreign tax credit shall be adjusted and the revised figure I need to take. So regular tax liability is equal 200 minus 100, that is 100. Whereas AMT is equal 300 minus 120, that is nothing but, all of you, 180. The differential amount between 180 and 100 is equal to 80. That's all. So the answer is as follows. The AMT credit to be carried forward under section 115 JD is equal to AMT after adjusting FTC minus regular tax liability after adjusting FTC. The differential amount can be carried forward. Okay, chalo. Now please come to another topic, that is as follows. How much AMT credit not allowed under section 115 JD? How much not allowed? Not allowed amount is equal foreign tax credit as for AMT minus foreign tax credit as for regular tax. The differential amount cannot be allowed. Okay, chalo. Now see the provision once again. In other words, the amount of tax credit in respect of AMT shall not be allowed to be carried forward to next year to that extent as follows. Difference between AMT, difference between the amount of foreign tax credit allowed against the AMT and foreign tax credit allowable against regular tax liability. The differential amount to that extent not allowed. Okay, chalo. So see that the regular provisions are as follows, where the amount of tax credit in respect of any income tax paid in any country or specified territory outside India under section 90, 90 and 91 allowed against alternative tax payable exceeds the amount of the tax credit admissible against the regular income tax payable by the SSE, then while computing the amount of credit under this section, comma, such excess amount shall be ignored. Okay, instead of reading this point, you can read the simplest, the other words. Okay, and I told you in the formula mode also how much credit cannot be allowed. The following credit cannot be allowed. How much? FTC as for AMT and FTC as for regular tax. The differential amount shall not be allowed. The differential amount shall be ignored. Okay, chalo. Better you can draw the point. You can write the point. All of you note it down. Just like a sentence, you can write separate point. Note it down. All of you note it down. AMT credit not allowed under section 115 JD is equal to foreign tax credit as per AMT minus foreign tax credit as per regular tax. As for regular tax, that's all. That is one point. Okay, chalo. And I would like to give you another formula kind of thing. There are no formulas, for better understanding purpose, that's all of you. AMT credit is equal to AMT credit under section 115 JD is equal to how much? Is equal to, all of you, very simple, AMT after adjust of FTC minus AMT, sorry, regular tax after adjusting FTC. That's all. This is the point. Okay, chalo. So this is the point with respect to AMT credit. Okay, chalo. Simple, only one line answer I would like to tell you. Whenever SSE has foreign tax credit, first of all, please adjust the foreign tax credit out of the AMT liability as well as normal tax liability. After adjusting the whatever the revised figures we got, that revised figures only should be considered for computation of AMT credit. This is the ultimate answer. Okay, chalo, that's all. Friends, start the running notes. All of you, where the amount of tax credit, in respect of any income tax paid, in respect of any income tax paid in any country, or specified territory, outside India, under section 90, comma 90A, comma 91, comma 91, against the alternate minimum tax payable, against the alternate minimum tax payable, against the alternate minimum tax payable, comma, comma, exceeds the amount of tax credit admissible, exceeds the amount of tax credit admissible against regular income tax payable by the SSE, against regular income tax payable by the SSE. Regular income tax payable by the SSE, comma, then while computing the amount of credit, then while computing the amount of credit, the amount of credit under this subsection, comma, such excess amount shall be ignored. Such excess amount shall be ignored. Full stop. Next point. In other words, comma, comma, the amount of tax credit, in other words, comma, the amount of tax credit in respect of AMT, shall not be allowed to be carry forward, to subsequent year, to that extent, such credit relates to that extent, such credit relates to the difference between the amount of foreign tax credit, allowed against AMT, slash FTC, foreign tax credit, AMT slash, that means AMT and FTC, foreign tax credit, allowable against the regular tax payable by the SSE. 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 Full stop. Friends, as for the Finance Act 2020 itself, Nirmala Sitharaman ma'am, Finance Minister, she introduced so many different tax alternative provisions. That is section 115 BAC, section 115 BAD. Like this, they introduced different alternative tax regimes. Now the point very simple. If any SSE opted these kind of provisions, section 115 BAC, etc., then take it for granted no AMT provisions are applicable. AMT provisions by default not applicable. Okay, chalo. For example, in the year 22-23, I want to follow AMT. Yes, you can follow, but you cannot follow the special provisions under section 115 BAC, cannot followed. That's all. No sir, in the year 2000, all of you 21-22 or else 22-23, whatever the year, I wanted to follow the special tax provisions, under section 115 BAC I want to follow. Yes, you can follow, but AMT provisions are not applicable for you. And one more doubt, sir, last year I have AMT credit, outstanding AMT credit, whether it can be adjusted or not. No way, you cannot adjust. So whatever the outstanding amount of AMT credit, it will get lapsed, that's all. Or else do one thing. Don't follow special tax provisions. First try to adjust the AMT credit. Once it is exhausted fully, then only you can go for the special tax provisions. Okay, that is up to you. But as far as subject is concerned, once SSE want to follow special tax provisions under section 115 BAC, BAB, etc., 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 then take it for granted the provisions of AMT are not applicable, and any AMT credit outstanding amount also cannot be carried forward. See the word, if SSE opts provisions of section 115 BAC, etc., then AMT provisions are not applicable, then balance or outstanding AMT credit cannot be set off against the income computed under section 115 BAC or etc. That's all. This is the point. So outstanding credit will get lapsed. That's all. Okay, chalo. So this point you can write as a running notes. If SSE if SSE opts provisions of section 115 BAC, provisions of section 115 BAC, comma, then AMT is not applicable. AMT is not applicable. AMT is not applicable. Next point. The outstanding AMT credit. The outstanding AMT credit cannot be set off against income under section 115 BAC, etc. Income under section 115 BAC, etc., etc. That's all. Fine. With this, done with the points. Okay, chalo. Friends, note it down. Last point. If SSE opts provisions of section 115 BAC, etc., then AMT is not applicable. AMT is not applicable. Therefore, AMT credit outstanding AMT credit or else balance or outstanding AMT credit cannot be set off against income under section 115 BAC. 115 BAC. Copy.